Let's check out the Dow Jones. Why not? We've got, and again, looking at it from an Elliott wave point of view, obviously looking at it from a trending point of view, as you can see, we called our uptrend just recently here, probably about 2 or 3 months ago. As you can see, the market has since then moved. It hasn't moved 10%, but it's moved a solid 5 to 7%. When the market moves 5 to 7%, guys, do you think that there would be stocks within that index that are moving more than 5 to 7%? Absolutely, exactly right. And again, I hope that makes sense. Apologies if it doesn't. But looking at it from an Elliott wave point of view, 1, 2, 3, 4, 5. This is on a medium-term basis, or medium to long-term basis. Now, what we'd usually have after 5 waves up is what? An ABC correction down. So ABC, 1, 2, 3. I think there's a song in that somewhere. But what we've had is we haven't had that ABC correction. And so what that tends to look like is, if we don't have 5 waves up, guys, then what we're looking at is an extended impulse move. An extended impulse move works in nine phases up, or 9 waves up. So instead of 5, we've got 1, 2, 3, 4, 5. We've got potentially 6, potentially 7. Moving up. Oh, see if I can get more information in here. Potentially 8 and potentially 9. Potentially 9 would bring us to around about 14,000, which is the previous highs at 2007. And again, obviously, we're already in that uptrend. You would expect some sideways movement around about the 13,000 level. That's going to be a big psychological level. And after that, potentially, we're seeing that last leg up. I think it was, yep, the last leg up to what would be around about the 14,000 level on the Dow Jones. So again, I hope that helps, and that's just according to an extended wave in Elliott wave theory. If we're looking at 9 waves up instead of 5 waves up, and again, if that's total gibberish, my apologies. I've given you the solid trend signals as well, so hopefully that helps. And obviously, this is the FTSE really quickly. Obviously, these solid trend signals, they're not rocket science. It's simply a line on a chart, as you can see. This is not difficult to do, guys. Really, really simple stuff. There's your line on a chart. There's our entry signal. And as you can see, the market has moved, again, probably about 5%, 5 to 7% since that signal. And again, if we get a 5 to 7% move in the index, do you think there'll be individual stocks within that index that will be moving greater than 5 to 7%? Absolutely, exactly right. So you're already picking up on this. You're sort of seeing how these things work and how they're related. Looking at a similar thing again. So obviously 1, 2, 3, 4, 5. A, B, C, and then potentially 1, 2, 3, 4, 5, A, B, C. There we are. Now, where does that bring us to? Well, again, it potentially brings us to a new 1, 2, 3, 4, 5 move. So in other words, an impulse move using Elliott wave. What we're looking at there is 1, 2, and as you can see, I've already drawn that line in. 3. Now, 3, the third wave, as I said before, usually the longest wave out of the lot. The highest probability move of a 3 move would be 161.8%. And that would bring us to 6,400 on the FTSE. Now again, that's just basically the highest probability move based on Elliott wave theory. It's not a guarantee in any way, shape or form. Nothing in the market is guaranteed. But yeah, that's what we'd be looking at. And again, the solid trend signal is still up. If it was to trade below 5,750, that would be an exit signal or a potential exit signal for me at this stage on the FTSE on a short-term basis. So, hope that makes sense again. In other words, 161.8% on the FTSE brought us to about 6,400. Now, really quickly, what have we got? Hang Seng. Similar thing happening on the Hang Seng. And what we've got, 1, 2, 3. So again, if we're looking at the Hang Seng, our initial target was already met on the Hang Seng, 21,700. Spot on, finding resistance there over the last couple of weeks. The real target for a wave 3, as we've said, is 161.8%. That would bring us to 24,000 on the Hang Seng. And again, over the last couple of weeks, we already called the entry signal, like the solid trending entry signal, at about 20,000 about 20,080, 20,100 approximately. And in the meantime, it's 21,500 it's moved to. So that's just the power of your price action. And again, what is that? That's probably about a 5 to 7% move over the last couple of weeks. So solid moves, like decent moves on an index. And yeah, basically that's it from an Elliott wave point of view as well. Looking at the Hang Seng. Just incidentally, where would the trend line resistance be? That would be about 22,600. So that's just something to be very mindful of at the same time. But in the meantime, the trend still remains up, guys. And if it was to close back below, basically you'd have your stop loss at break even right now. So in other words, where we entered, that's where your stop loss would be. You know, looking at potential moves in the Hang Seng or on the Hang Seng. So in other words, around your 20,100. And again, that's where the 50-day moving average is as well. And yeah, so really, that's a lot of information again, just throwing so much information at you guys. Apologies if it's too much or if it sounds like gibberish. Yeah, really, there is a lot to take in there. Where can we go from here? Nikkei, let's check out the Nikkei really quickly. What have we got? Obviously, we called our entry signal based on the price action down here about 2 or 3 weeks ago. That's at about 9,000. Since then, it's gone up to 9,777. So again, we're not looking at a 10% move, but it's close, 8 or 9% in a couple of weeks. Really, you cannot argue with that. That's absolutely fantastic. Anyone would be happy with 8 or 9% in a couple of weeks. Where we've got at the moment, again, just looking at it from a short-term Elliott wave perspective on the Nikkei, 1, 2, 3, potential 3 move. Wave 3 in other words, and this has gone to the top end of your wave 3, which is 261.8%, and as you can see, that's where it's finding resistance there at the moment. Looking at that on a you know, extending that out into the future, your wave 4 is usually a sideways move, so that's potentially what we'll see on the Nikkei, and based on that, that may go for a few weeks, or you know, this is the thing. After your wave 4, what you'll usually see is your last wave upwards, and that is also the world from a Chartist point of view. I hope that helps in some small way. Obviously, look at the price action. You know, for your solid entry signals and exit signals, always use a stop loss. Always use right money management, or you know, risk an appropriate amount that is right for yourself. And everybody's different. Have a great week. Until next week. And please check out my site, Dave's Trading Diary. I put all my live trade, you know, all my trades on the trading diary, what I'm actually currently trading in. It's transparent, so just check it out. You know, obviously, if you want to see how another person trades. I'm not perfect, I do make mistakes, and no one is right 100% in the market, 100% of the time. But I'm having some fantastic results on that diary right now, which is really good. Apart from that, have a great week! I will see you next week, and sorry for the length of this video, but yeah, we'll catch up next week. Have a great one. Until then, bye for now.